The headlines are screaming sell, algorithms are dumping tech, and investors are acting like the AI revolution just hit a wall. But what if this chaos is actually hiding one of the biggest buying opportunities of the decade? This isn't 2022. The fundamentals have never been stronger. AI adoption is exploding, cloud infrastructure is scaling at record speed, and digital transformation is no longer optional. It's a survival strategy. Yet the market is treating tech stocks like yesterday's news. That disconnect? That's where fortunes are made. Just weeks ago, Nvidia's CEO, Jensen Huang, took the stage at GTC and introduced the Blackwell architecture, a technological leap that could redefine AI computing. We're talking about chips designed for AI factories, autonomous systems, and next-generation enterprise intelligence. This isn't just hype, it's happening now. Top analysts are sounding the alarm. Not to sell, but to buy before the rebound. Dan Ives highlights that demand for AI chips is outstripping supply by 15-1. Let that sink in. This isn't a slowdown, it's a slingshot being pulled back. In today's video, I'm revealing 3 under-the-radar stocks that are set to ride this wave. These companies aren't just benefiting from the AI revolution, they're powering it. While the market panics, smart money is already circling. This isn't just a dip, it's a setup. First up is Alphabet Inc., Google, a tech titan that's quietly becoming one of the most undervalued power plays in the market. Fear is driving a mass sell-off in tech, but smart investors see the opportunity. Alphabet isn't just weathering the storm, it's planting the seeds for dominance in the next phase of digital evolution. With a $2 trillion market cap and over $100 billion in net income for 2024, backed by 14% year-over-year revenue growth, Alphabet is stronger than ever. But the real magic lies beyond the balance sheet. Alphabet is transforming into an AI-first company from top to bottom. Google Search remains the undisputed leader, pulling in over $54 billion per quarter. While critics worried that ChatGPT-style models would disrupt search, Alphabet flipped the script by integrating its own cutting-edge AI like Gemini directly into the search experience. That's not disruption, it's reinvention. Then there's YouTube and Google Ads, which are posting double-digit growth and generating an astounding $72 billion in annual ad revenue. YouTube Shorts is gaining traction, boasting engagement levels similar to TikTok but with significantly better monetization. But here's the real moonshot. Google Cloud, growing at 25% year-over-year, is rapidly gaining ground in AI-powered cloud services. Thanks to Alphabet's vertical integration, it can run large-scale AI workloads more efficiently than its competitors, giving it a serious edge in the enterprise AI race. On top of that, Waymo, Alphabet's self-driving division, just crossed nearly 1 million monthly riders. That's not an experiment. It's a business with trillion-dollar disruption potential. And with its first-ever dividend, a $70 billion buyback, and unmatched AI exposure, Alphabet isn't just a safe bet, it's a generational opportunity hiding in plain sight. Next up is Apple Incorporated, AAPL, a company not just enduring the tech sell-off, but quietly positioning itself for a major breakout. While short-term noise shakes out weak hands, smart investors know Apple is laying the groundwork for its next trillion-dollar expansion, and it's already happening beneath the surface. Forget the outdated narrative that Apple is just a hardware company. That ship has sailed. The real growth engine now is services. Apple Music, Apple Pay, iCloud, the App Store, all of which delivered $26.3 billion in a single quarter, up 14% year-over-year. This is recurring, high-margin revenue from over 2 billion active devices. It's sticky, scalable, and growing like wildfire. But Apple's innovation pipeline is also heating up. The new MacBook Air M4 is a game-changer, twice as fast as the M1 and shockingly $100 cheaper, signaling Apple's aggressive push into the PC market. Meanwhile, the iPhone 16e, priced at $599, is a masterstroke for expanding into price-sensitive markets, especially as global upgrade cycles begin to accelerate. The China slowdown narrative, it's being dismantled in real time. Apple is rapidly shifting production to India and Vietnam, de-risking its supply chain and creating long-term strategic flexibility. and with US tariff pressures easing, margins could start expanding again. Dan Ives calls this Apple's AI supercycle, a convergence of services, silicon, and smart devices, with generative AI being embedded deeper into Apple's ecosystem. The next wave of upgrades will be unlike anything we've seen before. This isn't just a bounce-back play. It's a tech titan evolving at the speed of innovation. Apple remains the crown jewel of consumer tech, and at current levels, it's an unmissable opportunity hiding in plain sight. And finally, the crown jewel of the AI revolution, Nvidia Corporation, NVDA. If there's one stock that defines this era of computing, it's Nvidia. While the broader tech market is caught in short-term panic, Nvidia is doing what only generational companies can do, rewriting the rules of technology at breakneck speed. At GTC 2025, CEO Jensen Huang didn't just unveil new hardware, he introduced Blackwell Ultra, a next-gen AI platform delivering up to 70 times the performance of its predecessor, Hopper. This isn't just an upgrade, it's a leap into a new computing paradigm. Blackwell isn't just about faster AI, it's about building AI factories at scale, the foundation for the next wave of trillion-dollar industries. Major players like Google, Microsoft, Amazon, and even new entrants are standardizing on Nvidia's ecosystem. This isn't hype. It's enterprise adoption at the highest level. Financially, Nvidia is a juggernaut. Q4 FY25 revenue hit $39.3 billion, with an astonishing 93% year-over-year growth in its data center segment alone, totaling $35.6 billion. That's not just explosive growth, it's historic. Dan Ives reports that demand for Nvidia's AI chips is outpacing supply by 15 to 1. That's a supply chain dream, and Wall Street is still underestimating how long this imbalance will last. And with Blackwell-powered AI factories becoming plug-and-play solutions, Nvidia is no longer just selling GPUs. It's selling the future of intelligence itself. Volatility may come and go, but companies like Nvidia don't just survive pullbacks, they launch from them. If you believe in AI, there is no clearer way to express that belief than owning Nvidia.